want to bring in right now somebody who's knee-deep in bonds. Shawn Matthews joins us. Cantor Fitzgerald, you had to snowshoe here. It's snowing, folks, in here. You had to snowshoe. It was like 1 block, right?
Yes.
And we booked Mr. Matthews before we knew there was a snowstorm. But that's cool. So, you know, it's nice to have you up here in Midtown.
Thank you.
And with all that's going on, I think we got a chart up here now, Rex. Can we go to this chart? Okay, we're not going to go to that chart right now. Fine, we'll come back to it. Bonuses. How was 2010 for Cantor, and generally, how was it for Wall Street?
2010 was a great year for Cantor. We continue to grow our franchise, which is the most important thing. Wall Street in general had a very good year. It was certainly a successful year.
Here's a chart from the Bloomberg. It's a yearly chart, goes way back to the 80s. Wall Street bonuses, and they're on a glide path, and then they boom in the middle of the last decade, and they're a little bit off now. When you talk to younger people on the street, how do you frame compensation if they saw Mr. Gecko? You know, they got all their stereotypes. The young Turk comes in, he knows Fibonacci up, down, and sideways. He's all bonds, and you say, wait a minute, it's 2011. What do you say?
Mr. Gecko was a long time ago.
Yeah.
Certainly.
You do look like him, though.
Yeah. Well, that'd be nice. Certainly going forward, structurally, the compensation packages will change on the street. They'll be more long-term in nature. We're a partnership, so we've always acted that way in general.
Okay, this guy gives short answers. Don't book him again. Okay, would you look at this? I want to bring up this chart. This is an important chart. This is my Bill Gross chart. Bill Gross said on the show, bonds have had their run. Now what? We've had this long disinflationary run. You've had the wind behind you. You know, just every year, lower yields, higher prices, really across all asset classes. What's the Cantor strategy if we begin to say the party's over?
I certainly think long-term yields are going to back up. It's going to be a slow grind back as the Fed starts to take some of the liquidity it put on the table over the last couple of years. But you're still looking at a fairly low inflation environment. You're talking about a lot of money that has to be put to work on a daily basis anyway. So I don't think that really changes the story. If we back up 50 or 100 basis points from here, rates are still pretty low. So you're talking about a 3.5%, 4% 10-year. Certainly in that environment, the economy can grow. Structurally, consumer credit will be there as well.
I want to talk about marginal employment movements. Everyone we talk to a person says, we're going international. Now, Cantor we perceive as domestic. I know that's not true. You got Uwe Parpart in Hong Kong.
Correct.
Just alone. Great strategist over in Hong Kong. At the margin, are you hiring abroad?
Absolutely.
Or do you say, no, we want to be in New York?
No, absolutely. We are looking to grow our franchise on a global basis. We're in about 14 countries right now. We're looking to take our global footprint up significantly over the next 3 to 5 years. When we look at the opportunity set that's out there, and with financial reform and financial institutions having to change the way they do their business, there is a real opportunity to create right below whatever we call the bulge bracket and that universal bank concept that almost killed us all.
There's not Fortress Matthews at Cantor Fitzgerald?
No.
Okay, we'll leave that to Mr. Diamond. Okay, so that's true, and you want to go abroad, and I've heard that from a lot of other people. What's the Cantor distinction in Hong Kong? When somebody knocks on a door in Hong Kong and says, do business with Cantor, what's the difference between you and 14 other people?
Like anyone else, this is a people business. So when it really comes down to it's a service business, we have our capital, we put to work for our customers. We don't trade proprietary on a global basis anywhere. So what we're trying to do is really service the customer base and extract bid-offer spread, which is a fair way to look at the business.
Okay, fine. Do you have a Blankfein dartboard? I mean, you look at, and I'm just picking on Mr. Blankfein or Mr. Vineyard at Goldman Sachs, but everybody says Goldman Sachs this, Goldman Sachs that. How do you compete to get brain power if you're competing against those bigger firms, those bigger banks, those bigger international institutions that want to come into the United States? I think of BNP Paribas as an example there.
Well, I certainly look at compensation structure. It will change over the next couple of years, and I think it'll be favorable to us being a private partnership. You know, certainly we have a percentage-based model mentality where we're willing to pay people for what they bring in, as opposed to thinking that the institution is the be-all to end-all, and that's what's driving the business. So I think there is a sea change that's going out there as far as how people get compensated, and it will be a beneficial to us.
Break exclusive here, Shawn Matthews talking Henry Kaufman. You're a private partnership. Can I use that phrase?
Absolutely.
How quaint.
It's
I'm
nice.
surprised you didn't show up in a bow tie. Great. So you're a private partnership. What is the response when you talk to people about that versus that big safety of a publicly traded firm?
I think the response is great. The customers know that it's our money that's being put to work.
Your money's at risk.
Absolutely.
How much is Shawn Matthews' money's at risk?
Enough.
It's
Absolutely.
a big figure.
Absolutely. It's a significant part of my net worth. And that's the way it should be. Wall Street used to look and act and feel that way. Somehow along the way it changed and created into this global, bank mentality. I think we have to go back to that quaint kind of 80s, 90s style investment bank. That's our niche. That's our focus. We're here for our customers over the long term, and we're going to continue to service them.
Compliance. How do you run compliance? Everybody has droves of lawyers. I had dinner last night with Leo Tillman, who was at Bear Stearns for years. He talks risk, risk, risk. How do you manage risk, whether it's people, compliance, or it's risk mathematics?
Well, I think risk management is done by each partner. So we have a interesting dynamic where everyone's money is on the line at the same time, so we're all looking to protect ourselves. In talking about compliance as far as with customers, like anyone else, you're gonna work as hard as you can to do the right things for the customer base. Again, we're not looking to trade prop against them. We're looking to be their partner over an extended period of time. Not one.
Explain this. Proprietary desk is where they put their own money to work. They really don't care about the clients. They just trade for them. So they trade for their own benefit, or they lose for their own benefit. You don't have a prop desk.
Not one.
When you look at all this, let's bring up this chart here. 2011, the year of the broker, and I mean that in a general sense, whether it's Morgan Stanley's new combined effort or what Cantor's doing. Not a pretty chart for the S&P 500 Capital Markets Index. What's it look like this year? Is it a breakout year, or do you enter it just 3 yards in a cloud of dust?
Yeah, I don't think it's going to be a breakout year. When you look at a low inflation environment, 6 to 8% returns are probably what we're going to look at over the next couple of years, which isn't that bad if inflation's extremely low. When you
look at the day-to-day battle and branding, how do you get the name out there? Where's the Cantor Fitzgerald Bowl? Or something. How do you brand yourself?
I think you do it by each individual employee, one at a time, doing the right thing for your customers, and that continues to permeate throughout the entire firm, and then it gets into the culture. People know us for that. We're a service firm. We're trying to do the right thing by them, and each time one of our partners talks to them, they get that message.